Tejinder Garg ji. Our panelist for today's session is CA Tejinder Garg ji, a very senior member. And let me proceed with a brief profile of our panelists for today. CA Tejinder Garg ji. He is a qualified chartered accountant and qualified in Jan 1991. After completing his graduation in commerce in 1987 from SG College, Sector 32, Chandigarh, he is having a vast experience of 31 years in taxation, auditing, and management consultancy. During last 10 years of his practice, he has handled about 175 income tax cases related to search and seizure operations. Sir, we welcome you, and it's a matter of proud moment for us that you have joined with us for this session. With this, now I request our chairman Upkar Singh ji to proceed from here about our speaker, sir. Over to you, Upkar, sir.
Thank you, Saurabh. Thank you so much. Respected members, good evening and Vande Mataram. I, on behalf of Chandigarh branch of NIRC of ICI, welcome you all on today's CP meeting on highlights of judicial updates and notable decisions of Honorable High Court and crypto taxation. I welcome Speaker of the session, Advocate CA Nikhil Goyal from Chandigarh. I also welcome CA Tejinder Garg ji, my dear friend and senior member of our branch, as panelist for today's CP meeting. I congratulate to new president of ICAI, CA Dr. Debashish Mitra ji, and new vice president of ICAI, CA Ankit Talati ji. I hope that our ICI will touch new heights under the leadership of CA Debashish Mitra ji and CA Aniket Talati ji. We are committed to put our best efforts to ensure the betterment of our profession. Your branch is standing with members and students wholeheartedly. Entire team is working towards hosting knowledge sharing sessions, sports and health activities. We seek your guidance and sports as always. I again request you to give your valuable suggestions for the more effective working of the branch and share your knowledge and wisdom with our members through the medium of monthly newsletters and be a faculty in seminars. At the end, I thank you all for attending this virtual CP meeting. और अंत में दो लाइनें जरूर कहूंगा, उड़ा दो रंजिशें इन हवाओं में यारो, उड़ा दो रंजिशें इन हवाओं में यारो, छोटी सी जिंदगी है नफरत कब तक करोगे, छोटी सी जिंदगी है नफरत कब तक करोगे. जय हिंद, जय ICI. Over to Saurabh.
थैंक यू उपकार सर, थैंक यू. बहुत अच्छी आपने दो लाइनें लास्ट में बताई सर, और इट वाज वेरी मोटिवेशनल आल्सो. Sir, to proceed with, I would like to request our panelist of today's session, CA Tejinder Garg ji, to say a few words about the topic for today. Over to you, Tejinder sir.
Good evening to all. Hello.
Yes, sir. You are audible, sir.
Audible, sir. Audible, sir.
Good evening to all. At the outset, I would like to congratulate the entire team of Chandigarh branch of NIRC of ICI, especially Chairman Sardar Upkar Singh, for organizing large number of webinars on various topics of professional interest and kept us busy throughout the year. Today's topic on highlight of judicial update and notable decisions of Honorable High Court has become more relevant and important with faceless appellate proceedings taking place, where it is being felt by all the professionals that doctrine of judicial discipline is not being followed in the appellate proceedings. This has fastened unnecessarily litigation on the income tax assessees. Now today's guest speaker, Nikhil Goyal, will enlighten us about recent judicial updates and notable decisions of various honorable high courts.
Thank you.
Thank you, Tejinder ji. Thank you so much, sir. Thank you, Tejinder ji.
Thank you, Tejinder ji. Tejinder ji, your guidance, we always need your guidance as a senior member in direct taxation. from
I
time
am
to time for
always
our young
available.
members also, sir. Thank you, sir. Thank you. To proceed with, I would like to give a brief profile of our guest speaker for today, Advocate Nikhil Goyalji. He is a practicing advocate and practicing at Punjab and Haryana High Court in corporate and financial laws. He is also appearing before NCLT and ITAT Chandigarh and Delhi benches. After practicing as chartered accountant for 3 years, Nikhil ji completed his law education from University of Delhi as a faculty of law and enrolled with the Bar Council of Punjab and Haryana. His law firm GAK Partners is a diverse litigation practice assisting in constitutional, civil, criminal, taxation, consumer, and real estate matters. We wholeheartedly welcome you, Nikhil, on behalf of Chandigarh branch, and we look forward for today's session on this crypto taxation, which is after this budget is now a very interesting topic because earlier it was not regulated, and now after this after this budget announcement of our crypto taxation, most of the chartered accountants are looking deeply into it, that how this taxation would be there and how the gains would be calculated on this cryptocurrency. So we look forward for today's session. Over to you, Nikhil ji. Thank you so much, sir. Thank you.
Thank you, Saurabh. And I'd like to extend a wholehearted thanks to the branch, the Chandigarh branch of ICI, for extending me this opportunity to speak on some fresh topics. I hope we are able to digress into some discussions after the presentation, because that would also give us some scope into delving into certain issues that might not have come up. So looking at so many senior members who have joined us today, I do feel they would have some professional insights to offer as well, especially on the topics of today's discussion. So I see that there's a lot of hype with respect to crypto taxation, and during today's presentation, I'll take up this topic first, followed by the notable amendments and judicial updates from different honorable high courts. So without further ado, I'll also share my screen. Just to confirm, we are visible. The screen share is visible.
Yes.
All right, great. Okay, so starting off with the crypto taxation issue, and the theme that I've chosen today is balancing the regulatory tightrope. Now, crypto in itself does have a lot of history to our country, and currently an estimation is made that the market is so big that even some form of taxation would really lead to some generation of revenue for the country. And I think that as a starting point makes a lot of sense, with the government coming up with a tax regime for these currencies and for these tokens, which otherwise have had a lot of involvement, especially from the youth. I do believe the lockdown in the last 2 years was one of the main growth drivers for such interest that has grown into cryptos, especially now allowing youngsters into equity markets and participation in such crypto exchanges across the world. So Digital India has definitely promoted participation of youngsters on such platforms. But now comes the question as to what will happen if we go into an unregulated territory. So before I jump into what the taxation regime that has been proposed in the budget is all about, let's just go into the background as to what exactly is this. So outside India and mostly all across the world, this is referred to as the DeFi, which stands for decentralized finance. Now, the idea behind all these technologies, the most popular being Bitcoin, the NFT, and Ethereum. These are the buzzwords of the decentralized finance. And these are based around the blockchain technology, which make sure that there is integrity to transactions. Now, the underlying idea or thought behind creating such technologies was to reduce the intermediaries in the financial system so as to ensure proper access of money or money worth to the final consumer and its easy transferability across the world. Now, obviously, such ease of access and transferability can be seen, and it has spooked governments all across the world. And banning or regulating cryptocurrency is not a foreign concept in any country, including major economies like the US and Singapore, which see a lot of traffic around these transactions, has also promoted some form of regulation. And one of the major needs for such regulation is investor protection. At the end of the day, there are certain products which come into the market and might be very lucrative. However, sometimes people are unable to look at the downsides. And taxing and allowing such crypto exchanges to exist in India is one of the first steps taken by the government to ensure that at least the transaction base stays in India. The problem with such tokens that can be transacted so freely is the fact that they will move outside India if there is no clarity with respect to the transactions. I'll come to the industry's issues with this taxation regime at a later stage. But to start off with, it's very important to bring these products into the regime of tax so that at least there is tracking by the industry. Now, as reported as late as December 2021, the crypto market is estimated at around USD 241 million by 2030. And that's a lot of money. And if you're taxing it at 30%, that's a lot of money for certain government schemes as well and helps with the fiscal deficit. Only if it is properly executed. And let's see what amount of transactions do remain on the Indian exchanges by the time this law is implemented in July 22. Now, I'm relying on Bitcoin as a case study just to make the whole presentation a little easy. There are other sources like non-fungible tokens and Ethereum, which also have their separate markets. But as a most popular product in the market in terms of virtual assets, we see the penetration of Bitcoin all across the world as one of the major sources of transactions in the country. Now, there are multiple sources from which Bitcoins can be collected by people. And the one that has been targeted by the government as of now is the exchange transactions. This means that you are converting your fiat money, that is the government-backed money, say an Indian rupee or US dollar, and you change this and buy any value of Bitcoin. So Bitcoin can be bought fractionally as well. So I think one Bitcoin in itself is very expensive and might be beyond an investor's scope of investment in such a risky currency. So it is allowed to buy Bitcoin as a fraction as well. So this allows for investing in Bitcoin up to the appetite of a particular investor. And such exchange then also allows you the liquidity of selling the Bitcoin at the exchange rate and getting money back in your account. So these are the most popular transactions with retail investors today who want to take certain risks in terms of speculation on the price hike or a fall of Bitcoins. And these exchanges have also now introduced forward transactions and trading in options for such cryptocurrencies. So just beyond the cash market transactions of buying or selling of a Bitcoin, they are also now making hybrid financial products around them for option trading, which makes for an interesting market because this is a new avenue for all traders. And therefore, with growing volumes, it's going to lead to some gains. The other most popular way of Bitcoin transactions is a wallet transaction. Now, this is the tricky one. Now, initially, when the idea or the concept was promoted by the founder of Bitcoin, Satoshi Nakamoto, he says the idea is to keep it secure in your computer. So the wallet generally means a hardware or a software wherein the Bitcoin is stored. Now, this is merely a virtual address through which you're communicating and the money or the token in question is being transferred. So at the end of the day, it's next to impossible, even for some of the top investigation agencies, to find the money trail as to how exactly the Bitcoins were transferred to a wallet. one of the concerns that the government should have is the source with respect to where this Bitcoin, which is added to an exchange by a person, has been sourced from, especially with the new law now proposing for a source taxation as well. This can get extremely tricky if there is any linking or nexus done by the government authorities to nab any such transaction where illegally or by some wrong means certain Bitcoin transactions are taken up. And this can land a lot of innocent investors in trouble as well, because initially there would be somebody who would be adding such Bitcoins available on an exchange for buy and sell transactions. So the source of such transactions is very difficult to trace. And Bitcoins have been notorious and infamous in the past for being used by certain unsocial elements of society to make gains by certain unfair means like hacking or by extortion. And it also comes in reports that such tokens are being used for all black market transactions as well. So there is no clarity as to the source and the genuineness of the background of how the Bitcoin that is being transacted on a exchange is valid or not. Now, the third and the rather rare source of getting a Bitcoin is mining, which is limited to very superiorly placed IT companies who invest in the resources to actually perform the transactions. So I'll not go into much detail into the science of Bitcoin, but basically, if one person is to transfer their Bitcoin to the wallet of another person, such transaction has to be verified across the decentralized ledgers of all computers. And the person who is able to do this mathematical calculation the quickest gets the reward in terms of a commission for mining that Bitcoin. So it's only when transfers take place that additional Bitcoins come into a market. And these are restricted to a finite number of 21 million. This finite structure of the Bitcoin is what promotes its value as a store and is being compared to certain class of assets which otherwise were considered as store of value, say for example gold. Now investors think that from a long-term perspective, Bitcoins might be a good source because after the completion of all mining, they will form a part of a market which will add value. As of now, the problem with trading in Bitcoins stays around the fact that there is no base around which we can trace a transaction, or how do we judge whether the value of such a product is going up or down. So the speculation is too high because the use case is very limited. In that essence, I would rather say that products like Ethereum hold much value because they allow developers and new entrepreneurs to build products around their technology. So that can be a better use case in the future, because some of the coins, and there are more than 300 of such crypto assets that exists, and all of them are not based around the same security backing, and all of them might not be as safe as some of the top technologies that exist in the market. So one should be wary as to investing in such coins or such currencies, that there is a huge risk of the entire setup failing where the promoters are not genuinely interested in promoting the idea further. Now, the Indian journey has been far and long. Now, crypto in itself has always been on the lens of the Indian government, and early traces of it can be seen. Sir, a lot of our seniors would remember back in 2017, there were a lot of surveys conducted all across India. And the source of conducting such surveys was the information received from this exchange called ZPay. When the transactions or the KYC documents with respect to the participants of such exchanges was with the income tax department, surveys were conducted all across the country. Now, since then, there has been a very big looming question as to how do you tax such a asset? Is it even an asset, or do we consider it some form of exemplary gain or some additional income being made from windfall transactions? Now, ever since then, because the rise of such exchanges which were unregulated was on the move, the government wanted to put a hold on such transactions. And the only reasonable way to putting a hold on such transactions was to call for a complete ban. Now, the RBI intervened and issued a circular to all banks that liquidation of such an asset was not possible anymore. Now, because of this, there was a complete standstill or a halt to this market. And the idea behind banning virtual currencies by the RBI was to ensure that such money is not used for any laundering purposes. Now, there is a very high risk that certain transactions which might fall in regulatory laws like money laundering or even Foreign Assets and Black Money Act might get transacted over an Indian exchange, and the money may be converted into Indian rupee and transferred into bank accounts. And to figure out such a trail would be very difficult, because nor would the bank nor would the exchange be able to answer as to what was the source of such bitcoins entering the transaction chain. But the Supreme Court in 2020, in its decision of 2020, allowed such transactions. Now, this ban was essentially reversed in 2020, thereby allowing a free flow of such Bitcoin transactions. And once again, the market started to pick up around this time. Now, in order to stop such transactions again, there was only one method available, that was a legislative route. Now, for 2020 and 21, the government had in its proposal a complete ban on virtual currencies by way of introducing a bill. However, such bill was not tabled for the 2 years. And one of the reasons it might not have been tabled was because the government is tracking as to what the other countries are doing in terms of regulation of such digital assets. And now, when we're in 2022, that entire threat of complete ban has been taken away by an introduction in the finance bill for a comprehensive tax regime as far as the transaction in cryptocurrency or virtual digital assets is concerned. Now, this is a welcome move as far as giving certainty to retail investors, especially those who only trade on the exchange. So there is now absolute certainty as to what is the tax regime and what are the implications of such transactions for them. Now, might not be a complete code in terms of the entire regulatory regime, because there are other laws governing such transactions, especially FEMA and PMLA, which have not been brought into consideration completely for such transactions. But there has been reported cases of people actually accepting these as a mode of payment, which clearly violate certain other laws beyond income tax. So while that might be in consideration and should be regulated far more aggressively, as of today, what we have is a taxation regime. So the retail investor, which is funding a market which crosses a good amount of revenue, would be able to factor in some additional revenue for the government. So tapping into this market would also give insight as to the profiling of people who are interested in such markets. Now, this was all about the treatment in terms of a regulatory aspect. But this is not new that people were dealing in Bitcoin before 2022. And this brings to question as to the retrospectivity of this taxation regime. Now, prior to the introduction in the bill, which still has not become an act, by the way, there were multiple methods by which people were actually bringing to tax their crypto income. Now, the most popular was to treat them as a capital gains tax and use the carry forward and set of provisions by relying on the original definition of property under the Income Tax Act. Since the definition in itself was wide enough, there was an interpretation from a lot of tax experts that it can be treated as an asset which is being traded, and the gains to it can be taken as a short-term or a long-term capital gain depending on the holding period as well. So because it offered a more lucrative taxation structure and also provided the benefits of a set off and carry forward regime. A lot of people have in the past reported their cryptocurrency related gains and losses under the capital gains regime. Some of the more focused investors or people who are only invested in the crypto market were also treating these as a business income, wherein they were claiming their business expenses and all related expenses of cost of acquisition from such an income. And this is more popular, especially for the trading segment in the futures and options of such cryptocurrencies. Now, this mode otherwise has been accepted because, say, it offers a 30% income in a regular case for different assessees, and therefore was one of the highest rates of taxation. However, the set-off of and claim of expenses otherwise could have led to deflation of such income, where the expenses might otherwise not be genuinely related to the Bitcoin activity. So what comes to question is such treatments, including income from other sources and set off against losses, would come into the picture, and this is going to become a litigation point in the coming times. So apart from the clarity that has been offered in 2022, from the perspective of a tax expert, it begs to question as to whether one would retrospectively apply such a regime to the assessee, or would they try to adjust within the scope of the act. So when we say that taxation of crypto is new, that might not be actually true. People have been in the past surveyed on this question. People have been searched on such transactions. So the government was adopting different regimes to this. But one thing that certainly does help is getting these out of the scope of the draconian sections, especially section 69A that can be applied for an unexplained investment where somebody is unable to prove the source of the transaction. So the amendment does help with respect to ensuring that if the purchase is also from an exchange, one cannot take leverage of the unexplained investment sections, because the explanation does come from within the code. However, the other transactions, say direct credit into your Bitcoin wallet without hitting an exchange, will again bring in a lot of issues with respect to different assessees, because not all assessees are interested to trade their Bitcoin over an exchange. A lot of them might hold them, and there is no control with respect to their travel beyond jurisdictional boundaries. And there is always a possibility that a person might liquidate their assets in a foreign country, and such accounting might not reach the Indian taxman, say within the time which is recommended for such transactions. So a lot of care and diligence needs to be taken with respect to properly conducting a KYC with respect to the source of such transactions with your clients. Because most of the times what is clear is that Bitcoin has been liquidated or a cryptocurrency has been liquidated on an Indian exchange, but there is no certainty as to where it has been obtained from. So having that certainty would go a long way in terms of ensuring any risk tomorrow at the stage of assessment or adjudication, that you are able to explain how this cryptocurrency landed to you. Now, this is all about the pre-amendment era, because before this amendment, the transactions were being taxed by a self-assessment method. And in certain cases where a mandatory assessment has taken place, different outcomes have come from different adjudications. So there is no one strategy that existed. And that is why there is a need for consistency in order to ensure taxation of Bitcoins. So that certainty has been brought in by our crypto tax code. All right. Coming to the basics of the tax code now, I will not go into the exact definitions which to be reproduced in the PowerPoint presentation. I'm certain most of you have attended a lot of different budget related seminars. The idea of this particular presentation is to expand the horizon of different professional opportunities that might exist in better advising clients with respect to their crypto transactions. So the tax code is a three-tier. One is the definition that has been introduced in section 2, subsection 47A, wherein the definition of a virtual digital asset has been proposed. Now, it is an exhaustive definition which covers mostly all virtual currency assets that exist, and it also provides the government an option to notify certain digital assets as not being virtual digital asset within the meaning of Income Tax Act. Because at the same time in the budget, there was a proposal to introduce a digital rupee as well. So the idea here is only to include such cryptocurrencies or such virtual digital assets which are not backed by any government. The idea here is to track such transactions, and how that is being done is the third tier, which is a withholding tax. Now, there are certain limitations to this withholding tax that has been proposed in the budget. Section 194S has been introduced in the budget for the finance bill, and it proposes for a 1% withholding on the transaction value. And such transaction value includes both cash and non-cash settlements of certain transactions. Why the industry might not be very happy about such a withholding? Because if one is to invest, say, 1 lakh rupees in a crypto trade, and they are into an options trade where they're quickly buying and selling their crypto assets, if I am being subjected to this withholding tax of 1% on each transaction, and I go through 300 such transactions, I might just actually run out of my initial capital, because every time I do a transaction, it would be amenable to a 1% withholding. So essentially, there is a risk of capital being withheld in my crypto trade, and the profits actually becoming only limited within the system, and their liquidity might be at risk. So all crypto trades might not lead to very huge gains. Those might be certain cash market transactions. But otherwise, for people who are frequently trading on such exchanges, especially on a day trading basis, they might face liquidity issues, and they might have to infuse more capital in order to stay competitive or to stay sustainable in the market. So this is one thing that might worry certain option traders with this new regime, because the 1% withholding is being proposed at the total payout. Now, whether it is at a loss or a gain does not matter. So this is another issue one has to look into. So say you sell your virtual digital asset at a loss, the value at which the deduction happens will be at 1%. The only saving grace here will be that at the time of filing your return, that will come back to you from the government. So overall, this regime might not be very suitable for very experienced or very involved Bitcoin traders or virtual digital asset traders. But for simple cash transactions, there is certainty for people who have a very small investment or portfolio and they're only learning about the market. They would be able to freely invest in such currencies. All right. Now the tax regime in itself has been proposed in section 115 BBH. So there's a flat taxation at the rate of 30% with no set off or carry forward of such losses. And this in itself is one of the highest rates of tax in the country, almost similar to lottery transactions. So the government's aim is not to promote this as a stable market, say an equity trading or trading in stocks of companies otherwise, or bonds, etc. Because of the risks involved, they want to disincentivize the investor into not treating this as a very lucrative source. So this only leaves this regime leaves investment in virtual digital assets to very high fluctuations, which these days cannot be seen in such assets. And at the end of the day, the gains, the real-time return on such investments might be far lower due to such high rates of tax. So overall, my opinion with respect to the tax code is it gives certainty to new investors who are just entering such markets and are not much aware of the downsides and risks. It gives them the certainty and it gives them the confidence that there exists a tax regime that can be trusted. But for a person who might be very much involved in a day trade for such transactions, or might be interested in carrying forward their business at a long term, will see a lot of capital risk in such business. Apart from this, there do exist a lot of avenues with respect to further enforcement. We have introduced a tax regime, yes, but there is a need for a more stringent regulatory regime that is able to capture such transactions, not only from the perspective of an exchange trade, but also just understanding where the money is flowing. Now, I talked about the off-market and wallet transactions during the initial parts of the presentation as well. Now, what happens is most people might just liquidate from the exchanges by taking the cryptocurrency to an exchange of a different country. I think the government would look into the same, but there is a need for information sharing, and such information sharing would only be possible if such exchanges are regulated in the other country. What I mean by that is, say if in India we are regulating or we are making sure that the stock exchange of the exchanges for virtual digital assets are to report under the Income Tax Act, this creates a regulation. However, it might not exist in all countries, and therefore such information sharing might not be possible with respect to the stringent KYC requirements that exist otherwise in terms of the Financial Action Task Force recommendations. The OECD as well is working on such a framework that there is an identification of people who are on an exchange, because otherwise there is no track of a transaction, and this can lead to one of the major problems, that is round tripping of investments. Say a person has invested in certain virtual digital assets by converting Indian money into a virtual digital asset. Now they can exit by removing this virtual digital asset into their personal wallet and then transfer it to another wallet in a different country to be exchanged in that country's exchange, which might have lesser regulation. Now, because of the regulatory gap, there is a possibility for a short period of time that such assets might get converted outside the country. And this could lead to money flowing back into India as a round trip of their investment, which is not to be brought into the ambit of tax. So I think such transactions should be stringent regulatory check. And certainly there has to be a better follow of the money trail, especially under FEMA, because all inbound investments are taken under the lens of FEMA, though most investment is under the automatic route, but certain regulatory checks can be introduced to ensure that the sourcing of such funding is not from any virtual digital asset liquidation. Another risk that exists, there have been a lot of hacking scams over the past few years, the blue dot screen, and there have been other customer support scams that exist all across the world. And one of the prime methods in which such scams unfold is through payments in Bitcoins. Now, it's extremely sad that we are unable to trace such transactions, and a lot of such transactions are being reported back to Indian IPs, which creates a risk of possible money laundering that is happening through such virtual digital assets. So I think a more detailed regime needs to come in place with respect to capturing such transactions and ensuring that there is a proper background verification of the source of such Bitcoins. Now, one of the issues that is not addressed in our crypto tax code otherwise is how to tax the gain on a mining transaction. The problem with mining of Bitcoins is you have to invest in very high power computer resources, good servers, a lot of electricity is consumed in mining such a Bitcoin. And therefore, would the government allow me that cost when I am to liquidate my asset on an exchange? So this is a question that has not been addressed, because otherwise mining might not be the most popular way of getting a Bitcoin or getting a virtual digital asset. But still, there has to be some clarity with respect to assessees that claim that their source is mining of Bitcoin. So this will be a tricky question even for the taxman, that if the Bitcoin has been generated through mining, at the end of the day, it cannot be treated as an exchange transaction where only the cost of acquisition of such an asset is to be allowed. Whether the resources that I've invested in generating that Bitcoin would be allowed to me becomes a very good question. And if not resolved within the bill, this would become a question to be adjudicated before different authorities and would lead to certain appeals. So this is another question to look out for, especially for our tax professionals, because this is going to take a lot of time to settle. And we can see such litigation coming up, say within a year or two, because when more closely such assets are being monitored, there is a possibility that past crypto transactions might also be revealed. Say if an assessment is taken up for the assessment year 23, 24, and there is some inquiry about previous holdings in Bitcoin, that can lead to certain actions under section 147 and section 153A, read with section 132 obviously. But that is all subject to these transactions actually coming under the monitoring for assessment purposes. So these lead to some interesting questions, and I feel that the taxation regime is a very welcome and a good start in order to provide certainty to our investors, but is not the point where we stop or we take a rest. There is a lot of scope in this market wherein clarity with respect to enforcement will really help investors, and also the entrepreneurial zeal that exists around developing products which can adapt to such virtual digital assets will be promoted further if more clarity with respect to the enforcement is done in the future. So, Tejinder ji, I just wanted to take your view on this. Do we deliberate further on this issue first, or I can switch to the second topic for today's discussion? Tejinder ji, I think he's not available at the moment. So this was the deliberation as far as the crypto taxation regime was concerned. So I believe we'll switch to the next topic around the notable updates from different honorable high courts, and we can have a Q&A at the end. So proceeding further with the presentations. All right, so as I've done in the past with the previous sessions that I've done with this branch, before I jump into the notable updates of the different high courts, we'll also just delve briefly into the exercise of the writ jurisdiction in these tax-related matters. I'll give a brief update on the controversy around the 148A versus 148 regime, which is especially one of the hot topics, and a lot of assessees have a question as to whether they should opt for a writ petition, and when does one opt for a writ petition in such cases. So I'll delve into those different questions. And lastly, I'll be taking up certain high court decisions, honorable high court decisions from different high courts across the country, wherein the law related to reassessment has been further improved, and there is more certainty around certain questions on the applicability of this reassessment code. Moving on to the first part of this deliberation. A lot of times we are intrigued into opting for a writ at a very early stage, and sometimes it might not be the best idea to prematurely consider knocking the doors of an honorable high court with respect to tax related matters. The Income Tax Act, as you've seen by its size, is quite comprehensive in itself and does have a lot of opportunities with respect to appeals, revisions, or review of any decisions that have taken place. So it might not be the best idea for taking up the writ jurisdiction with respect to all matters, and it is only in those circumstances or those exceptional cases where no other remedy under law can be exercised and there is a risk of some prejudicial loss to the assessee being caused, where you consider a writ jurisdiction. Now, some of the basic considerations when you are taking up a writ petition, you have to first decide who is going to be the necessary party with respect to the government. So ensuring that we put everyone who has to be a respondent becomes necessary from the perspective the honorable court can only give directions to the parties that are impleaded in your petition. Now, say for example, in a particular case, you are aggrieved by the actions of a learned ACIT, but in your petition, you have made the Union of India party, you made the CIT a party, but you do not make the actual authority against which the grievance exists a party. Therefore, the petition in itself would not be admissible because of incomplete particulars. So one has to clearly understand as to who all need to be a party to a particular petition. And you have to ensure that all of them are properly serviced, and what exactly is their role in this particular petition has to be defined within the petition. So there is also no fun in unnecessarily making additional parties to a writ. Say you sometimes end up making certain authorities a party to a writ even when their involvement is not actually there. So if your pleadings are unable to demonstrate how their participation in a particular writ petition is necessary, the court might also exempt their requirement from attending such petition. So that is one of the most basic fundamentals, that you have to first identify exactly who is aggrieved and against whom such grievance exists. So only after such a decision is made is the first stepping stone into understanding where exactly is my writ to be filed. Now, more often than not, there are issues which transcend certain state boundaries, and the honorable high courts of a country are limited to exercising their jurisdiction over the state in which they are set up. Now, say for example, it's the Honorable Punjab and Haryana High Court. It exercises jurisdiction on the states of Punjab, Haryana, and the UT of Chandigarh. Now, say in your particular case, there is a grievance against port authorities based out of Mumbai. Such a writ might not be maintainable in the Honorable Punjab and Haryana High Court, even if the assessee is based out of that particular city in Punjab or Haryana. The problem with that is the court in its mandate might not have the jurisdictional mandate to take up any action against authority which is beyond the scope of the state's authority. So always ensure that you understand who exactly needs to be made a party, and you have to decide the jurisdiction very carefully. Sometimes you might be aggrieved by certain decisions of central authorities. In those cases, however, you are welcome to approach the jurisdictional court of your residence. Say, for example, your petition is against the union or is against a central authority, say CBDT. In those cases, you are still very much within the mandate to approach your jurisdictional high court, And it's not always that you have to approach the Delhi High Court in such cases. So one has to understand that the jurisdiction of a court is a very core concept as to whether it can pass any decision or it can give certain directions as may be prayed for in the writ. Coming to the prayers, so you get what you pray for. So sometimes we end up making a petition which really does not delve into what exactly is the relief that is being sought. You might file a petition, say, against a notice under section 148 that has been issued after 1st of April 2021. There are a lot of petitions pending on such issues, but you might not seek a relief of stay. So where such relief is missing within your pleading, you might not be eligible for claiming such reliefs. So you have to be exhaustive in terms of what exactly is being sought, because there is a very limited possibility that the court might allow you to amend the prayers. So in case you start off on the wrong foot and the remedy that you sought is not really listed as a prayer, there is a very real possibility that your writ might become infructuous and you would have to file the petition again. One of the questions that comes up a lot of times in professional discussions as well, a lot of people are interested in approaching the writ jurisdiction, but they are extremely delayed in terms of deciding on the action. I've come across cases where, say, a refund was decided back in 2011 and it's pending for the last 10 years, and suddenly somebody says that, okay, let's just approach the honorable court. The court does not deny the fact that you're eligible for your particular relief, but the court will also look into the conduct, that there is no unnecessary delay that has been taken up by the assessee or the petitioner. So one has to be in a position to address such questions before the court. So if you see that there is more than a reasonable time that has taken in approaching a particular matter before the honorable court, we are ready with the response as to why such a delay has happened. Might be because the professional who was handling the case earlier might not have actually filed a physical application but was appearing before such authority. But at the end of the day, it is always advisable as a practice, in order to prove your cause of action, you should have the necessary proof to show that the authority you are aggrieved with is in notice of your grievance. So more often than not, we do not find a trail of paper that exists which shows the efforts made by the petitioner. So always ensure that there is a proper documentary trail which shows, say, you've filed your applications, reminders to the application, grievance applications, or filing a grievance with a higher authority, say the PCIT or the PCCIT, demonstrating that you have been active in terms of pursuing your right. So wherever from the record it does not show that you have been actively pursuing the right, the honorable court might not be interested in dealing with the issue, because there shows certain latches, and in that scenario you are left only to the remedy as available under the Income Tax Act. Although there exists no limitation for certain actions, but at the end of the day, then you become then you are at the mercy of the particular administrative authority to ensure that your right is actually given to you. So always make sure that there is a proper timeline of events and you have created a proper cause of action. So unless that exists, it is a futile exercise to approach an honorable court, because one, there always exists an alternate remedy within the act, even for cases sometimes we're not aware of. Say, one of the hot topics these days is attachments under section 226(3). So a lot of people, as soon as the account gets attached, they are told that they can approach the honorable court. However, one has to see to the fact that there exists a proper circular in place by CBDT, which says that you're supposed to make your petition for stay of demand first before the jurisdictional assessing officer. Where you're not satisfied or you're still aggrieved by the decision of the jurisdictional assessing officer, you are to approach the jurisdictional CIT. And after that review is complete, and a speaking order has been passed is only when there is no further scope of an appeal or a revision, and you might become eligible to approach the Honorable Court. So unless you have exercised all the rights that have been granted under the Income Tax Act, you should not be approaching an Honorable Court with a petition, because that is premature. Even if we file such a petition, the only direction that we might be able to get from the Honorable Court is that you approach the correct authority, and that correct authority may decide the case in XYZ time. So that might be the only relief that can be sought at that stage. However, where you go with the proper trail and there exists documentation to show that two authorities have applied their minds, that is when the Honorable Court might be interested to hear the case on the merits of the technicality that you're bringing to the court. Another thing that we have to understand is these writ petitions are only limited to certain kinds. Now, this jurisdiction of writ in tax matters is a constitutional remedy, and mostly these are writs for mandamus or certiorari. So mandamus is a writ directing an authority lower to the court to do or not to do certain action. Now, say for example, a mandamus could be issued to process a refund within the next 4 weeks. So this is a writ of mandamus, where you're aggrieved because of the inaction on the part of a particular authority, and you bring to the notice of the court that there exists no other alternative remedy to that effect. A writ of certiorari relates to quashing of certain orders or notices. Now, say for example, these 148 notices that got quashed in various honorable courts, I will coming up with that topic after this. So those are writs of certiorari, where those particular orders which are beyond the mandate of law are quashed. However, one has to understand that the Honorable Court will not completely close the window, and these are not adversarial proceedings. So these are not proceedings where somebody wins or loses. It is only where rectification of a certain wrong is done. Now, especially for 148 matters as well, one would be aware that at the end of it, even after quashing, the Honorable Court allows liberty to the government to reissue such notices where the time limit does exist. So at the end of the day, a writ petition should not be treated as an adversarial proceeding where somebody has to go and win and lose. And this is not going to be primarily a discussion on the merits of the case. There are very limited matters, especially say challenging a search, where the Honorable Court is one of the limited authorities that can actually look into the search records. But for regular matters, say assessment or reassessment and appeal related issues, one has to be very certain that there has been a violation of a fundamental or a constitutional right, or certain other remedies, say principles of natural justice, which create a cause of action under a writ jurisdiction. Because for all other things, there exists an appeal or revision under the Income Tax Act. So one has to give this undertaking while filing a writ that there exists no alternate efficacious remedy other than by filing an appeal or revision. There do exist certain points in law. There have been judgments in the past where such a condition with respect to an alternate remedy being of existence has been looked into and has been given a not very important stance by the Honorable Court. Those are exceptional circumstances where exercising an appeal jurisdiction might not be in the favor of the assessee, but that cannot be said for each and every case, because there has to be a peculiarity as to certain non-application of procedural law or natural justice, which brings to the fact that there has been an improper investigation conducted. So you cannot take merit directly to the writ court. One has to exhaust their remedies under the Income Tax Act with respect to the first appeal and the second appeal before the Tax Appellate Tribunal before approaching the Honorable Court on a substantial question of law. So one cannot directly take their merit to the High Court and skip those two levels. Now, even before the case is decided in an Honorable Court with respect to writ jurisdiction, admission is a hurdle. Now, the previous slide, we discussed the various aspects that one should look into. And those are the kind of questions that would come up before the honorable court. So having ready answers for the same would help you prepare better in terms of ensuring that the admission stage is properly dealt with, and whatever questions that do come up before the honorable bench are properly addressed. At the end of the day, we are to assist through our pleadings and through our arguments. But at the end of the day, the honorable court in its wisdom has to decide whether this matter would be admissible to be exercised under the writ jurisdiction or not. And this is one of the last resorts that one should look at rather than being the first avenue. Because at the end of the day, where there exists certain remedy under law, it is within the wisdom of the legislature to allow such remedies. And one should not always twist the fact in a way that such remedies with respect to constitutional rights are being exercised. Coming to the 148 versus 148A controversy. Now, this has been one of the most discussed topics in the past few months, and a lot of judgments have also come in during this time. Now, one has to understand that this might not be a very effective remedy for all assessees, and that is one point that needs to be clarified, especially when you're advising someone to go for such a writ. Now, especially after taking a look at the different decisions by the honorable courts, one thing is very clear. The tax department has been given the opportunity to amend the wrongs by ensuring that the notice can be issued again where there exists eligibility to issue such a notice. Now, if we are proposing to a client that such a notice can be quashed, what also needs to be told is there is a possibility that the notice might be reissued by the same authority in the future. There are certain amendments to the section as well, section 149 especially, which would be quite notable. And one has to properly understand whether the cases can be reopened or not. Now, after the amendment on 1st of April 2021, there has been twin conditions that have been imposed regarding the reopening. One is that the case can be reopened up to 3 years, but where an evasion detected is upwards of 50 lakh, the period extends to 10 years. However, this 10-year period is not applicable to all assessees. So this 10-year period gets reduced to 6 years with respect to assessment years before 1st of April 2021. So for up to assessment year 2020-21, the period for which we can look back still remains to be 6 years. So as of today, if we are standing at 31st March 2022, the department would be at liberty to reopen cases for assessment year 2015-16, where the detected evasion crosses 50 lakh rupees. Now, small changes have been brought in the scope of this timeline, especially one with respect to what kind of escapement can be treated for this aspect, and for how many years can such reopening happen. One tiny amendment that has also taken place with respect to this 6 versus 10-year controversy is the benefit has further been extended with respect to 153A and 153C. Now, in cases related to search, the timeline that has to be looked into with respect to reopening under section 147 is to those sections 153A and 153C, rather than the timeline that was available under the pre-amended act with respect to section 149. What that does is, say a particular year would not have been under the review of reopening, under the purview of reopening, under section 149, but at the same time, there exists the time to reopen the case under section 153A or section 153C. In those cases, if a section 148 reopening is proposed, the timeline has to be looked into with respect to those sections also. So this is only relevant with respect to the search cases. Now, as 31st March 2022 approaches, all notices issued with respect to AY 13-14, 14-15, and 15-16 will be in the sunset timeline. So if the cases with respect to 148 reassessment have been issued with respect to these 3 assessment years, and the sunset time has already crossed with respect to these petitions, these particular years can now not be reopened. So with respect to years, say 16-17, 17-18, and 18-19, if the assessee has a copy of the reasons of reopening or is aware as to the transaction, and there is a real possibility that the amount which is suspected to be evaded in these years exceeds 50 lakh rupees, there is a very real possibility that even after quashing of the notice, there is a very high possibility that it will be reissued. So one has to be very aware of these things when advising a client with respect to quashing of notice. And this is not going to be a one-time process, especially where the detected evasion is quite high. Now coming to the decision matrix so far. Now initially there was a judgment in favor of revenue from the Honorable Chhattisgarh High Court. Now the update with respect to that is that a writ appeal has already been preferred against the decision, which is admitted by the Honorable Division Bench of the court. I have also cited the writ appeal number for the reference of all participants. So you can also follow what happens with respect to this decision in the Honorable Chhattisgarh High Court, because so far this was the only judgment which was in favor of revenue. And the reasoning that was given by the Honorable Court related to the pandemic and the extension of procedural laws being allowed by the Honorable Court for due to operational difficulties. Although various other honorable courts have distinguished this very judgment while passing their orders with respect to the 148 controversy, it would be interesting to see how it is dealt in the writ appeal, and there is a possibility that the original decision might be reversed. Now, the first judgment that was delivered in favor of the assessee with respect to notices under section 148 was from the Allahabad High Court in the case of Ashok Kumar Agarwal. Now, this decision has now been challenged before the Honorable Supreme Court. Now, I have cited the SLP civil number for this particular case, that is 1328 of 2022. This was listed yesterday for the first time on 11/2/2022 and is now returnable on 15th March 22. So, which means that the Supreme Court has issued notice in this particular matter and it will be heard. So the SLP has not been dismissed at threshold, and there is a real possibility that after 15th of March, as of now, there has been no stay to the judgment of the Honorable Allahabad High Court, which means that the quashing of notices is still in force. However, there is a possibility, and one should be tracking such decisions, because sometimes the Honorable Supreme Court might stay the decision of the lower court. There are twin considerations that have to be taken care of in such a situation. One is, if your assessee is now filing a new petition with respect to such a scenario, your Honorable Court might not be interested to allow stay of the proceedings in such a case, because the Honorable Supreme Court has already stayed the question. So fresh petitions filed after 15th of March might not be eligible for opting for a stay. And in any which case, as of today, all assessees that are approaching the Honorable Courts for stay or quashing are subjected to this question by the Honorable Bench as to the delay with respect to filing the writ petition, because most of the notices were issued up to 30th of June 21, and we're standing in Feb 22 right now. So at the end of the day, one has to be certain that if they are interested to take up any quashing in any of the Honorable Courts, this is a date that must be highlighted, that 15th of March 2022 is the next listed date for this case, and depends on what stand the Honorable Court takes. But if one is considering taking the writ route with respect to their case, it would be a good time to take up the consideration at this point. The next decision that was delivered with respect to 148 cases was by the Honorable Rajasthan High Court. Now, this was a judgment that has also distinguished the judgment of the Honorable Chhattisgarh High Court and has conferred with the view of the Honorable Allahabad High Court. And again, there has been the remedy with respect to reopening of the cases if the limitation still exists, and that is favorable for the revenue with respect to years which might not have completely elapsed in terms of reopening time. All right. One of the more famous decisions that was delivered by the Honorable Delhi High Court was in the case of Manmohan Kohli versus the ACIT. And they again have given the same judgment with respect to quashing of notices which were issued after 1st of April 2021, relying on the previous regime as per Finance Act 2020. Now, there is absolute certainty with respect to quashing in the Delhi High Court because the Honorable Court is also allowing other petitioners to follow this decision and get notices quashed even after the judgment of the court. One question that I have often come across from different professionals is, can I simply cite the decision of the Honorable Court in this particular case if it is from a jurisdictional High Court? And will that be sufficient in terms of the assessment proceedings? The answer is we cannot comment on whether the assessing officer would be relying on such a decision and would be amenable to the jurisdiction with respect to you. So the writ petition is limited in jurisdiction to the person availing the remedy. So if Mr. Manmohan Kohli approached the Honorable Court, the decision that has been given by the Honorable Court relates to him. As far as the declaration is concerned, what has happened is the Honorable Courts have also given a writ of declaration with respect to the ultra vires nature of the 2 circulars that were given by the Income Tax Department to extend the jurisdiction under the previous act. So as far as that is concerned, it might become a good question in appeal that the entire proceedings may be quashed basis that declaration. Now, that is completely upon the professional advice and also the preference of the assessee, whether they want to go for a writ petition or they can rely on such a decision with respect to the vires of the 2 circulars basis which the jurisdiction has been assumed. So if you are opting for the appeal route and you're not approaching the if you're not approaching the Honorable High Court, one suggestion would be to make sure that your objections to the reopening are properly citing those decisions and at the same time are referring to the objection clearly being against the notifications against which the jurisdiction has been assumed. So it can be taken up in appeal, and it would be a good question to see whether these would fall squarely on the jurisdictional issue. So that is dependent on the assessee. If the merit in their case is very strong and they're aware that there has been some wrong communication with respect to evasion of income or otherwise, they might still fancy their chances with respect to a proper assessment. The next more recent decision is from the Honorable Calcutta High Court in the case of Bagadia Properties. And this again relates to the same issue, 148 assessments. It was pronounced on 17th of January. The most recent one is from the Honorable Madras High Court. As of now, I do not have a citation reference. So I have just put the writ petition number for your kind reference. So the Honorable Madras High Court has also followed the Honorable Allahabad and Delhi High Courts in quashing the notices. And here I've just reproduced for the reference of the audience the paragraph that exists in almost all the decisions so far. It would be I'm reading the text highlighted in red. It would be with the liberty of the assessing authorities to initiate reassessment proceedings in accordance with the provisions of the Act of 1961 as amended by the Finance Act 2021 after making all compliances as required by law if limitation for it survives. So the Honorable Court has not closed the route altogether. It says that if the limitation as of date exists, you will be with the liberty to reinitiate the proceedings, provided they are done by compliance of the proper law. Now, some decisions that are awaited as of now. One is the Honorable Bombay High Court. As of now, the last hearing was conducted on 7th of Feb, and they have now been listed for 24th. The reason being, as of now, virtual courts were conducted in the last 2 months, owing to the increase in the Omicron variant and a lot of cases across different high courts. So it's expected that physical appearances might start sooner in different parts of the country, and a decision can be expected from these honorable courts in the future. So it's listed next for 24th of Feb. In our further coverage, we'll also update, and in case you're interested, you can always get in touch with us and we'll update you with respect to the different honorable courts and the judgments. In our jurisdictional high court, that is the Punjab and Haryana High Court, the lead case in this bunch is CWP 13990 of 2021, which is titled Abhimanyu Sagar. In our honorable court, these cases are next listed for 22nd of Feb. They were previously listed for 24th January and 8th of Feb, but again, because of the pandemic situation and virtual hearings, this matter could not be taken up. Further updates with respect to the same, we'll provide you as in when the court starts functioning in a more physical method. So as of today, the notification is that the honorable tax benches will be sitting on alternate days in the physical mode. So the next time this matter gets listed on 22nd of Feb will be in the physical mode. So if there are any further updates, you can always get in touch with respect to the progress of the matter. In our honorable court, there is a second bunch of matters. So this is not seen in any other court so far with respect to any decisions on this particular issue. But there are certain cases where the notices have been issued on the 31st of March, but the email service of such notice has happened on the 1st of April. And in this particular batch, so this is separated from the main petition where the notice is issued on 1st of April. So the decision will also be delivered separately in the two petitions. The lead case in this particular bunch is writ petition number 14886 of 2021. And here the contention is that with respect to following the procedure under section 148, issuance and service have to be looked into together, which was one of the issues discussed in the Honorable Supreme Court judgment in the case of R.K. Upadhyay. So this is again one of the areas where stay has also been granted by the Honorable Court. But I'd like to again point out that the decision will be delivered separately in the two bunches, that is CWP 13990 and CWP 14886. Now I've just curated some judicial updates with respect to different courts delivering judgments on section 147, 148 matters. This is now extremely beneficial for certain professionals because right now, most of you must have received the notification on the e-filing portal now. And assessing officers on the NFAC are now providing you the copy of reasons. So this is high time that we are filing our objections to the reasons. And I'd like to cite some important decisions that have come up from different honorable courts, which might be helpful when you're preparing such responses. So a latest decision by the Honorable Bombay High Court is in the case of Oracle Financial Services. This is a case where original assessment under section 143.3 was carried out, and thereafter 147 reassessment was proposed beyond 4 years, but before 6 years. Now, the fact pattern here was that a particular query was already raised during the assessment proceeding, and a proper response was also provided. Now, the operative part or the relevant part of this judgment is that it would be deemed that the AO has considered the submission of the assessee and has applied his mind to the same, even if no discussion of the same is made in the order. A lot of times, multiple questions are asked in the questionnaire issued under section 142(1), and they do not really find a place in the order itself. But sometimes audit objections are raised on a particular submission, and the assessee is subjected to the entire rigor of going through a reassessment merely on an audit objection. So this particular case settles that position, that if subsequently an assessment is reopened based on the same material on record without bringing in any new material, this would amount to a change of opinion, and it amounts to a review of the earlier assessment order. And this is very clear in terms of the fact that review in itself was not permissible under section 147. So this could be useful, especially for assessees where an original assessment has already been carried out. This is more on a procedural front. This is River Valley Meadows and Township Private Limited. Here, a very interesting procedural defect took place, that the notice was issued prior to the date of approval. So the notice was issued on 25th of June 2019. However, the additional CIT had signed off on the 151 approval on 26th of June. And it is always advisable, whenever you are participating in any proceedings under section 147, it is always advisable to seek a copy not only of the reasons for reopening, but also of the entire approval memo, which is the section 151 memo. So you are aware that the reopening has been conducted by the correct authority, and at the same time, the approval is not antedated. So just make sure that such documents are in place, and you might be in a position to make a technical challenge with respect to the reopening in itself. Next, I have discussed this decision particularly in my previous deliberations also, but I find this particular decision very relevant, especially for people who want to challenge the merit of their reopening before an honorable court. Now, unless there exists a primacy defect in the very reopening, the honorable courts have not shown interest in quashing the proceedings altogether. What I mean is, there are certain circumstances, if I deliberate one of the issues being discussed in our honorable court a few days back, related to reassessment of a trust, and the period of reassessment even precedes the date of formation of the trust. These are conscionable questions that can still be looked into in terms of the reasons of reopening being discussed on merit. Otherwise, if there exists cogent material on record and there exists a reasonable apprehension on part of the assessing officer, there are very limited chances that the honorable court may be interested to go into the merits of the decision. So one has to understand, if after receiving the speaking order with respect to an assessment, you decide to approach the Honorable High Court, the High Court will be giving a decision on the merits of the particular reopening. So if you are certain that the merits are such that it shows certain prima facie defect in the very reason, it becomes a good case. But otherwise, the Honorable Court was very clear that an investigation should not be nipped in the bud. And if you would like to read the last line, in normal circumstances, one would not prefer to pluck the flower at the budding stage unless it is infected. Thus, the intervention during the initial stage is to be exercised sparingly and only if there is a blatant violation of the act. So just to ensure that, make sure that you put your proper reasoning in terms of objections to this reopening of an assessment. But not all such speaking orders can be challenged before the Honorable Court. And there is always the possibility of the same being accepted in the appeals. One of the other decisions with respect to the revenues point of view, here it was more from the angle that the revenue authorities should be taking the effort in terms of collecting all the external information, and should ensure that proper support is given with respect to such information collection. And the proper use of such digital tools should not be taken with respect to exploitation of the tax laws and unjust enrichment, but rather towards information collection and ensuring tax revenues. Again, a decision in the favor of revenue, and it also shows the line of thinking here that one cannot always take shelter of the tax laws in terms of finding out lacunas to get out of a particular investigation. Rather, one has to submit to the jurisdiction where it has been validly assumed by the honorable authorities. This is another decision very relevant, especially I think there are many decisions previously on the same point. This is a more recent decision with respect to the service of your notice. Now, oftentimes the notice has been issued on 31st of March, but say you receive it on 10th of April by post. It's a very settled position in today's time and date that at the end of the day, if the notice was issued in time, the service part has to be completed, but the same cannot be ensured within the limitation period of 31st of March. So the issuance and putting into service has to be done within the 31st of March, but its actual delivery might be late. This decision of Gujarat High Court is with respect to certain reopening based on the information passed on by the investigation wing. So far there have been judgments which say that blind reliance on the information that has been passed on is not sufficient. But one has to very deeply examine the reasons for reopening and find out what kind of an analysis has been done by the assessing officer. It is only in such cases where there has been a blatant reliance and there has been no contemplation with respect to the information available on record can you challenge such reopenings. But at the same time, the Honorable Court has again discouraged the approach to the Honorable Writ jurisdiction in this particular case and has advised that it is a case that has been reopened with proper information and therefore should go through the entire process of law. This one, again, an interesting issue, especially, for assessees that need some guidance with respect to the assessments of a deceased relative. There are instances where proper information with respect to the death of a particular assessee has been provided to the assessing officer, but still the assessment continues in the name of the deceased person. So the Honorable Madras High Court has clarified this position, and there are a plethora of judgments by Honorable Delhi High Court, Gujarat, and multiple fora. Even the Punjab Haryana High Court has opined on this, that once the death certificate has been shared with the assessing officer, the proceedings cannot continue in the name of a demised assessee. The last deliberation for discussion today, I am taking up this decision. Again, upholds the values or the parameters that were laid down back in 2002 by the judgment in Honorable Supreme Court case of GK and drive shafts. So where the objections to reasons for reopening were disposed only by stating that proper approval was received, the matter was remanded for passing another speaking order. Now, some of us would also face this issue, especially in this faceless assessment regime, that when you apply for the copy of reasons, there is a delay with respect to receiving. And when you're given a copy of reasons, simultaneously, you're also being given a 142(1) notice. So it is advised that you first deal with the objections, if any, you have to file against the reasons of reopening, and accordingly deal with the 142(1) after a speaking order has been passed. Because the procedure that was laid down in Honorable Supreme Court judgment in GK and drive shafts was that after the notice under section 148 is served, the first responsibility is of the assessee to file the return of income. Once that responsibility is completed, a copy of reasons has to be provided by the assessing officer to the assessee. Once you have the copy of reasons available on record, you can file an objection against those particular reasons. And the assessing officer is under the obligation to pass a speaking order disposing your objections. So until these processes are complete, the assessing officer is ultimately not in a position to continue the assessment proceeding. But we have seen in multiple cases that 142(1) notices are issued simultaneously, and we end up participating in the assessment, and sometimes the assessing officer might end up not passing the speaking order disposing the objections. So do take note of such lapses, and one should ensure that the proper procedure as has been defined by the honorable courts be followed. So with this, I would end the presentation and deliberation, and we can open up for some questions or some comments from your end, sir. Tejinder ji? So should we open the floor for some questions, or in case we have some deliberations from your end, we can start with that. While we wait for any further questions and instructions with respect to the webinar, I'd also point out at one amendment that is very relevant with respect to certain decisions by the honorable courts, though I've omitted that particular deliberation this time. It was with respect to section 144B, subsection 9, which has now been omitted in the proposals of the finance bill. That particular provision dealt with the certain orders which were not passed within the procedure of section 144B to be non-est. So that particular provision has now been omitted, and this amendment is proposed to be effective retrospectively. So at the end of the day, a lot of decisions by different honorable courts was delivered, wherein a lot of assessment proceedings that were not conducted within the procedure were quashed. But one of the grounds for such quashing was violation of the principles of natural justice. So in terms of the validity of those judgments, those would be still valid. But at the end of the day, as I've deliberated multiple times, it would be a balanced decision. Even if the proceedings are quashed, the revenue will be given liberty to pass a fresh order. So it does not mean that the assessment in itself gets quashed, but it is rather remanded for following the proper procedure. But this amendment would play into the very nature of the proceedings, in the essence that these proceedings which do not follow procedure are not automatically non-est. This could have been extremely prejudicial to the department, especially at appellate stages of the ITAT, wherein had this provision existed, there could be a scenario that people might just quash the assessment altogether on technicality. The interesting litigation that would follow around this is assessees that did not approach the honorable courts with respect to quashing of the assessments, but rather preferred appeal, would challenge the retrospectivity of the amendment, and assessment orders that were passed in the past year under section 144B, would those be amenable to the jurisdiction under section 144B9 or not? So this is another issue that we can see coming up in the next 1 or 2 years when such matters reach the honorable ITAT. The audience is welcome to put up questions, if any. Tejinder ji, any questions from your end or any collaboration that we can further discuss? We have a question in the chat from Mr. Rishabh Marwa. Very interesting. He says, can you share some possible views on ways of dealing with wallet transfers of VDAs? And how do they get checked? Now, Rishabh, I just concluded my LLM thesis on this very issue. And my research paper was around the enforceability or tracing of transactions. Now, there exists no definitive answer to this. So, because of the nature of transactions and the masked identity of the users of such medias, it is not possible to figure out as to where the transaction trail exists. In the past, certain agencies like the FBI have tried to create a pattern of such transactions. And in the end, it came to a conclusion that it's a in-depth exercise that cannot be very accurate. In Indian context, it's only if there is prior information with respect to possession of such VDAs in a wallet that a computer resource can be seized and a trail of transactions then appear. Again, one of the major issues in such seizure also would be it only reveals the receipt. At the end of the day, one would still not be able to trace the origin of such receipt. Say an authority is to seize your computer resource that consists of the wallet, and through that it becomes aware that, okay, you are in receipt of X number of VDAs in your wallet. The question then becomes is, if you are unable to prove the source of such bitcoins or such other virtual digital assets, at the end of the day, you will be subjected to jurisdiction under section 69A. The market value will then be traced to that date, and you would be subjected to the higher rates of taxes, and the valuation might be done at any rate, either on the date of passing the order or on the date the transaction reveals. If there are any further questions, they're most welcome either on the chat or there's a follow-up question. If you could clarify further as to the question on whether it being an asset or not. Now, even the Act calls them an asset. So otherwise, if there's any other interpretation that is being sought here, SP Goelji wants to raise another query. If the admin could allow him to unmute.
गोयल साहब पूछिए आप सर, आपको अनम्यूट कर दिया।
हाँ जी सर, निखिल जी।
जी सर।
जो क्रिप्टो के केस में जो 1422 से तो गवर्नमेंट ने 30% टैक्सेशन की बात कह दी,
बिल्कुल,
और स्लैब रेट की बात कह दी, 30% फ्लैट रेट है। तो व्हाट विल बी द टैक्सेशन इन द करंट ईयर? मतलब whether it can be taken as a business income and expenses can be claimed for
both routes are available. Either you can take shelter of capital gain, or you can also take shelter under business. Depends on how you demonstrate how it is business as a factual matter. It's easier explaining it as an asset and taxing it under capital gains. And if it's held for more than 2 years, there's also the possibility of a lower tax rate.
Suppose a person day intraday trading, just like in share, sale purchase, and then incur some gain during the month or during a particular day, and that is a short-term gain or business income, and he has hired some technical professional to assist him in that business or to do that business of sales, because there is technical expertise is required. Which Bitcoin, which foreign currency, fiat money has to be purchased or been sold, and this and that, and which exchange they purchase from one exchange and sell in another exchange. There is a difference between the exchange rate of the two exchanges.
Definitely.
So ultimately, any administrative expenses or hiring of technical person for doing that trading business, I think that can be claimed in the current year up to
Most definitely, especially
if the payment
for
has been made.
Another advantage I'll explain to you is there is this provision with respect to speculative businesses. Now that only applies to the derivatives that are regulated by SEBI or are under the SCRA. Since an amendment has not been made in the SCRA, you can also refer to this as a regular business rather than being a speculative business also.
We can show as a regular business.
Correct. So since this does not fall under the purview of the Securities Contracts Regulation Act, you do not even need to go to the speculative business regime.
Nikhil ji, should I raise one more question?
Hanji, sir, please.
Sir, in this crypto trade, there is a system of airdropping. Suppose any entity want to create new cryptocurrencies. So before launching that cryptocurrency, they create a market. Just like in share, they profile of the company and that and that. And whoever give them marketing base number of clients, they give him what you called some coins as a reward.
So that amendment is now there in the Act. So otherwise also 56(2)(10) of the Act was sufficient because the scope was so wide, it contains the provision that any person receives from any other person anything.
No, sir. Before 31 Bhai, if they get some token and they sell it through Rigaud stock exchange and bring that money through that exchange into Indian rupee, convert that fiat money or wo token into the थ्रू रिकॉर्डेशन सेल करते हैं उसको, और फिर अपने रिकॉर्डेशन के थ्रू इंडियन रुपये में बैंक अकाउंट में आ जाता है पैसा। वो पैसा तो उसका सोर्स भी प्रूव करना पड़ेगा, वो रिवार्ड मनी मिला जो।
सर आपको सोर्स तो पहले 56 to 10 में उसका टैक्स भी भरना पड़ेगा ना।
टैक्स तो 30% दे देंगे।
हाँ 56 to 10 में पहले आप सोर्स अपना पक्का कीजिए और फिर आगे करिए उसको।
सर सोर्स की ट्रेल नहीं दे पाएंगे।
That is obviously going to be a very tricky situation because
सर उसकी ट्रेल नहीं दे पाएंगे। मेरे को रिवार्ड मनी मिला, मेरे को कॉइन मिली, मैंने वो कॉइन को इंडियन उसमें यूएसडी में करके या किसी फिएट दूसरी करेंसी में कन्वर्ट करके मैं रिकॉग्नाइज सेल करके वो जो ग्रॉस रिसिप्ट है उसमें मैं टैक्स देती हूँ इंडियन करेंसी में, इंडियन रुपीज में जो वैल्यू आएगी मेरे पास। तो मेरी वो 30% टैक्स देके जान छुट जाएगी, या मतलब इससे फर्दर तो नहीं मेरी कोई वो नहीं होगी कि
69A can haunt you।
हाँ वो ट्रेल नहीं दे पाएंगे सर। दिक्कत यही है कि वो पीछे कहां से आए, कैसे मिला, बट सर
बहुत सारे इश्यूज हैं with respect to source which is not addressed in this taxation regime at all।
मुझे ऐसा लगता है, सॉरी टू इंटरप्ट यू, मुझे ऐसा लगता है 1/4/21/23 फिर भी अभी अनसेटल्ड इशू हैं, फिर भी इतना ज्यादा शायद थोड़ा लीनियंट व्यू ले लें या उतना डिटेल्ड इन्वेस्टिगेशन में ना जाएं। 1/4/22 के बाद तो डेफिनेटली गवर्नमेंट एज पर नाउ प्रोविजन के हिसाब से 68 लगाना, 115 बीबीए की बात करेंगे या जो भी करेंगे बट एवरी में भी, पर क्योंकि बिकॉज देयर इज द इन्वेस्टर कैन वेरी वेल से कि देयर वाज नो रूल, your Indian Act has not defined
multiple cases before assessment up to settlement।
सब इंडियन गवर्नमेंट ने पिछले 10 साल से इसमें रेगुलेट करने की बात कर रही है, तो मैं कह सकता हूँ आपने ही डिफाइन नहीं किया था, आपने इसकी नेचर को डिफाइन नहीं किया था और आप ही नहीं रूल एंड रेगुलेशन बना पाए। मैंने अपनी समझ से काम कर लिया, तो मेरे से टैक्स ले लो आप।
This will go up to the highest courts with respect to what is the correct method of taxation, and my personal understanding is that honorable courts will allow multiple methods since there existed no clear way of taxing it।
ठीक सर, थैंक यू so kind of you।
Obliged।
I request Mr. Rakesh Garg from Kanpur to speak something। Rakesh Garg ji।
Seeing no further queries and we are approaching the hour mark, I leave it to your discretion।
Nikhil ji,
sir।
I think Parikshit ji has some question here।
हाँ जी सर। परीक्षित
जी
could unmute।
मैंने कर दिया अनम्यूट। परीक्षित जी आप क्वेश्चन पूछिए सर।
नहीं मेरा क्वेश्चन नहीं है, बट मैंने तो निखिल जी को बस आज के इस प्रेजेंटेशन के बारे में अप्रिशिएट करना था कि बहुत बढ़िया प्रेजेंटेशन दी उन्होंने आज, और इनकी प्रेजेंटेशन को देख के ये लगता है कि हमारा सीए प्रोफेशन भी और इनकम टैक्स प्रैक्टिस भी दोनों आर इन एक्सेलेंटली गुड हैंड्स। तो मैं यही कहूंगा कि ये रेगुलरली अपना एक्सपीरियंस जो है हाई कोर्ट का और ट्रिब्यूनल का हमारे लोगों के साथ रेगुलरली शेयर करते रहें, और जो भी जजमेंट्स इनके पास आती हैं, ऑल्दो ये तो ग्रुप में डालती रहते हैं, हमारा जो पर्सनल ITT बार का है, लेकिन हमारे ब्रांच के प्लेटफॉर्म के थ्रू भी इसको ये रेगुलरली करते रहें। और ये एडवोकेसी की तरफ चले गए हैं, लेकिन जो इनका पेरेंट प्रोफेशन है उसको बिल्कुल ना छोड़ेंगे हम।
Sir, thank you very much, and you are one of the guiding lights for us in the profession. And your knowledge sharing initiatives are always appreciated by us at the bar, and definitely those learnings are communicated further through such platforms. Thank you very much.
Sir, I want to say something, sir. Should I speak?
Please, please, sir.
Sir, I want to bless Mr. Nikhil Goyal ji. आप बहुत लंबी रेस के घोड़े हो. My blessing are with you. You have delivered a very good, positive and intelligent talk on the both topic. God bless you, my son. Thank you, sir.
Thank you. Thank you very much, sir. Always blessed. Thank you.
निखिल जी को क्वेश्चन है सर?
Not a question, but only appreciation.
हाँ खन्ना जी, राकेश खन्ना जी आप भी बोलिए सर.
I'm sorry to
खन्ना जी प्लीज बोलिए सर, बोलिए सर.
I just wanted to add my only observation and appreciation that it has always been nice to listen to Nikhil, and he has always been very, I would say, thorough in his presentation, and I have been listening today also his presentation, though very technical, but he was very calm and cool, and very calmly he was explaining everything. That was wonderful. Mr. Nikhil, please keep it up. Wish you all the best. Thank you.
Sir, any question, sir?
Sir, this is Rakesh Garg from Kanpur, Advocate Rakesh Garg.
Yes, sir. Yes, sir. Please, boliye, sir.
Greetings to all. Excellent presentation by Nikhil ji. It was quite elaborative, quite detailed one, and I wish him all the best. Very well explained. Keep it up, Nikhil. Okay.
Thank you, sir.
Hello, sir. Excuse me.
Sir.
Hello.
हाँ जी मैम, बोलिए मैम.
Yes, yes.
Thank you, sir, and we are grateful for your valuable time, sir.
Thank you.
All participants from behalf of I am from Kolkata, CS Man Murarka. Heartiest thank to each and every participants, more than maybe 105, those who are participating in such a beautiful, memorable event. And thank you by heart, sir. We are learning a lot, but due to too much tight schedule, I couldn't able to give my 100% to my colleagues.
Thank you so much, ma'am. Thank you. Thank you, sir.
Sir, प्रणाम, सत श्री अकाल.
हाँ, सत श्री अकाल मैम.
कब बुला रहे हैं सर चंडीगढ़ हम लोग को?
आ जाओ मैम, जब मर्जी आओ मैम. You are most welcome.
वाहिगुरु से प्रार्थना करिए हम लोग फैकल्टी बन जाए, कुछ आप लोग की सेवा कर पाए.
बिल्कुल मैम, आप हमें फोन करिए. आप फैकल्टी तो आप बने हुए हैं मैम. आप बताइए आपने कौन से टॉपिक पे बोलना है.
सर
थैंक यू मैम, थैंक यू सो मच.
थोड़ा यदि इंजन के आगे धक्का दोगे ना तो डब्बे अपने आप चलेंगे सर.
बिल्कुल चलेंगे मैम, बिल्कुल चलेंगे.
थैंक यू सर, थैंक यू.
ओके मैम. हाँ जी निखिल जी.
With your permission, let's
yes
to a close.
हाँ जी, yes sir. Yes.
Thank you
so much. Thank you. हाँ जी. Thank you so much Nikhil ji for your wonderful presentation on the topic assigned to you. Really, it was really wonderful. It is very interactive also. I'm also thankful to Tajinder Garg ji, our panelist, our senior member of branch. Thank you, Garg Sahab. Thank you so much.
Thank you, sir. Thank you.
I am thankful to all the participants, also our senior members, Khanna ji, Ashok Goyal ji, Stija ji, and all senior members of the party. Thank you so much.
Thank you, sir. Thank you.
Thank you. Thank you, sir.
लोगों का काम